Hi, Chair. I've messaged iPhone to ask them to identify themselves, but they're not responding.
Okay, then I think we must remove them if we do not know who they are and they're not responding. If you are able to do so, thank you. Good morning, everybody. It is 10 o'clock and we have a tight schedule with a comprehensive briefing this morning. A hearty welcome to everybody. A special welcome to the honourable members, the DM as usual, Honourable Godlimpi, welcome. To the leadership and the presenters of IDC, NEF and ECIC, to the department as well as our support staff. Madia, I have 4 apologies that you sent through to me. Do you know of any other apologies?
Yes, Chair, if I can just go through the apologies, Chair. We've got in terms of members, we've got apologies from Ms. Lamini and Mr. Modisi. And then in terms of the executive and the department, we have apologies from the minister who is attending, who is in China, and the Deputy Minister Stian Harrison, who is attending the Portfolio Committee meeting. In terms of the IDC, we also have apologies from the board chairperson, Mr. Sirobe, who's also in China with the minister, and then the IDC CEO is also in China with the minister, Chair. Those are the apologies.
And then the DG as well, if I remember correctly.
Yes, correct, Chair. The DG is also attending the Portfolio Committee meeting.
Okay, thank you very much. Could I ask that you just flight the agenda? Colleagues, in front of you, you have the agenda. Before I move and ask for the adoption thereof,
Recording in progress.
Could I ask that we add an extra set of minutes that need to be considered and adopted, and those are the minutes of the 10th of June. In saying that, could I ask for a mover and a seconder, please? Honourable Pinar.
Good morning, Chair.
Yes,
Morning,
you may
Chairperson.
proceed.
Thank you, Chair. I move for the adoption of the agenda with the addition of the minutes you just spoke about.
Thank you very much. Honourable Nodada.
Thank you, Chairperson. Good morning to you and the honourable members and Honourable Golimbi and the department. I second the adoption of the agenda with the addition of the new minutes to be adopted. Thank you, Chair.
Thank you very much for that. DM, before I hand over to you, I just want to give my little brief opening remarks by saying that all 3 of these institutions play an absolutely critical role in our economy, and the work that they do has a direct impact on whether businesses are able to grow and whether people are able to find work and whether our economy becomes more competitive. So for me, today's engagement is less about the plans on paper and more about what they will mean for us in practice. We need to understand how these plans will make a real difference, how successes are going to be measured, and how we as a committee of Parliament can ensure that the commitments made today do actually translate into meaningful results. We appreciate your time. Once again, you're always available when we knock on your door, so thank you for that. And we look forward to an open and constructive discussion. Please just take note of some house rules. Each entity has been given 20 minutes to present. And as you know, we are very fortunate in having received these presentations well in advance, which has given members more than enough time to study the presentations. And I ask that we, as far as possible, try and keep to these time slots. And in saying that, Minister, I would like to ask you to proceed with your opening remarks, after which you can then hand over to the IDC to present, then the NEF, followed by the ECIC. And if your department has anything to add, they are more than welcome to do so. Thank you, DM. Over to you.
Thank you very much, Honorable Chairperson, and good morning to you. Good morning to all the members of the Select Committee, and a special word of greeting to the DTIC team from the leadership of the DTIC, as led, I think, by the CFO, if I'm not mistaken, and all of the executives from the entities themselves. And once again, thank you for giving us this opportunity to present before you, Honorable Chair. As I repeatedly say, we value the conversation with the Select Committee because it helps us to at least provide a spatial outline of the work that we do and how it connects with provinces, but also to get insights from how the provinces experience our work, so that where there are gaps, we can then effectively find ways to improve on that, so that the impact of the work we do could be measured on the ground itself. And the Select Committee members are good ambassadors of those sentiments on the ground. And as you already started out, Honorable Chair, you are quite correct about the strategic value of these three entities. They are probably some of the most vital instruments of igniting economic growth and export growth in South Africa, and thereby being essentially our bulwark for job creation, as it were. And you're correct when you say they also interface with enterprises in South Africa, helping them to improve their own business operations, growth projections, and let's say even help them improve their operations. So the IDC would and the NEF would be your partners in providing capital to assist these companies to either move from concept to actual operations or to scale up. And the ECIC is our principal instrument to helping South African businesses reach out into export markets by providing that vital insurance cover. And there are discussions as well in seeing how the ECIC could also provide trade finance as well, so that it doesn't just provide export insurance, but it could also assist South African enterprises to finance their movement from South Africa into those markets. So that's part of the conversation we're having today. Let me just start off with the IDC, which is essentially our largest development finance institution since 1940. And its main work is to drive the growth of South Africa's industrial capacity. And with respect to what you were saying, the IDC is currently undertaking a strategy review to increase its developmental impact, but it does that whilst trying to maintain financial sustainability. And that has to do with its focus on future-oriented rich value chains. So you will see in its 2026-27 corporate plan that there's the target of 51.5 billion rands in disbursements over the medium term, and the 1.6 billion rands in disbursements over the 1.6 billion rand in structural savings over 5 years. And it will do all of that while remaining the country's largest BBBE financier, with dedicated support for Black industrialists, women, youth, and that spatial inclusion that I was talking about. So that's on the ITC front. On the ECIC side, its corporate plan outlines its role in advancing export-led growth, as I was saying, including cross-border investment, industrialization, and inclusive transformation, by providing cover against commercial and political risks. Now, if we think about the African continent, Chair, but I think that would be a debate for a different day, the work that the ECIC does is very, very crucial. And it will be much more crucial in enabling South Africa's maximum participation in the African Continental Free Trade Agreement. We usually talk about improving market access, but access into different markets also comes with particular risks. These risks include the fact that we function on the basis of different currencies with different countries in Africa. We use different financial systems. There are also political risks because the types of political regimes that operate there are different. So when a company says I've received an order from another company in the DRC or in Ethiopia or in Nigeria or in Ghana, it's a good thing to be celebrated, but there's always the question whether in selling those goods, can they guarantee that what is on the contract will be honored? Can they guarantee that their goods will be protected until they reach the intended recipient and there will be no disruption and so on? So the ECIC provides that cover because it has the experience to understand the political terrain in the continent, but it can also then insure it against any other fluctuations, both in currency and so on. So it's very important in that regard. As part of that explanation, the ECIC priorities for this financial year includes this export growth I'm talking about, economic transformation, improving operational efficiency, financial sustainability, and organizational culture transformation. Its key targets include 530 billion US dollars in medium and long-term approvals, 180 million US dollars in short-term approvals, gross written premiums of 1.8 billion rands, and facilitating 10,000 job opportunities through manufactured exports. Now, the reason we denominate a lot of the ECIC amounts in US dollars, Honorable Chair, is essentially what I was trying to explain, that the ECIC operates outwardly in international markets. And of course, the dominant currency in there that helps you to reduce currency risks is using US dollars across the different markets. So that's the reason why its amounts are coming in US dollars and the others are coming in rand denomination. Now the NEF as well, together with the ITC, their annual performance plan and corporate plan focuses on advancing Black economic participation, industrialization, enterprise growth, and employment. So during this financial year, the NEF aims to disperse about 1.5 billion rands, and it projected to create about 4,200 jobs, but also defend about 6,300 existing jobs, and then facilitate 2,500 youth placements. But also it will work to mobilize 900 million rands in third-party funding and operationalize the transformation fund that the TTIC has been talking about. So the work of the NEF, more than any other entity, is designed to support Black industrialists. But the strategy that they now are pursuing is to find Black industrialists who are aggregators, so across different provinces, people who can help us to leverage existing potential in these provinces and aggregate those outputs in those regions so that we could have a much more scalable ability to assist enterprises in those areas. So that will include working with SMMEs, investing in skills development, focusing on tourism and cultural beneficiation, with a particular focus on rural areas, townships, and provinces with lower levels of economic activity. So, Honorable Chair, collectively, these three entities play a critical role in advancing the priorities of the DTIC through investment mobilization, industrial development, transformation, export promotion, and sustainable job creation. Now, their plans all demonstrate a commitment to balancing development impact on the one hand with financial sustainability on the other hand, whilst expanding opportunities for historically disadvantaged individuals, businesses, and communities across South Africa. So with those remarks, thank you very much, Chair. That is my introduction of these three entities. Thank you.
Thank you very much, DM. Before we hand over to the first presenter, could I just take the opportunity to welcome the DG? According to the Secretariat, he has joined our platform. Welcome, DG. Over to the next presenter. Thank you.
Good morning, Honourable Chair, Deputy Minister, and colleagues and honourable members. I'm not too sure if I can be heard. I have switched on my video, but I'm not seeing it on screen. Hoping you can all see me. And the presentation will be flighted by my colleague, David McGlure. David, if you can pull up the presentation.
Okay, just to give you the assurance, I can see you, so you may continue.
Okay, thank you. Thanks, Chair. So the presentation, and thank you for the introduction. It does assist with how we will present. Firstly, just to say, I'm hoping that our CEO has been able to join now. I wasn't aware she was the iPhone. She's in transit in China, but she did want to join at the very least, even if she couldn't present today. So I'm hoping that she will rejoin during the course of the meeting. So if we can move, Dave, thank you. And apologies that there's two Davids on the line. Hope it doesn't lead to any confusion. So as per the request from committee, we will do an overview of the IDC that focuses on our mandate and our core functions, how our governance structures work and our funding model. And then we will focus on the strategic plan, a strategic vision, our performance targets, and our financial outlook. And I will, in line with your guidance, Chair, focus on core deliverables for the corporation over the coming period. And that really is, how we plan to accelerate industrialization and support transformation. So we can skip this slide. That's just our alignment. So we, at IDC, we are the largest development finance institution that focuses on building industrial capacity. I'll go into the detail of the sectors that we do support, but we are primarily focused on unlocking economic opportunity that will then also unlock job opportunities, particularly in new sectors. But we have, and I will touch on it, we have recently had a large focus on defending industrial capacity as well to prevent deindustrialization. So that's also an important component of our mandate. When the Act was updated post-democracy, we did also include amendments to our mandate. So that means we used to have a South African focus only. It was expanded to the rest of the continent. We were also given a mandate to support SMEs and to support transformation, which has been a key component of our work since democratization. The mandate of the IDC is in our founding act of 1940, and to bring to committee's attention, the key focus is really what's captured there in the left, to facilitate, promote, guide, and assist in the financing of new industries and industrial undertakings. So that remains the core of our objective as a corporation. However, as I've mentioned, that as we pursue this objective through sector development opportunities, we are also aligned to the latest government policies, particularly of the 7th administration, in promoting employment, entrepreneurial development, transformation, sector and regional equity, and have a focus also on ensuring that our growth is in support of environmentally sustainable growth in line with the industrial development strategy's decarbonisation objective. This is a brief overview of us. It gives a sense of our size. We have assets of over 130 billion. I see our CEO has joined us. And we are spread across South Africa through a network of regional offices as well. We currently have about 819 employees as well. it's important to highlight to the committee that we do not receive a direct funding line as IDC. We are expected as a Schedule 2 entity to be self-funding, and that we fund ourselves through internal profits, divestments, and borrowing. So internal profits is interest, but also we do sometimes, and we obviously get dividends from our equity investments, and that money we put back into the corporation to fund it. It is worth mentioning that we do have a number of incentives that we also manage on behalf of government. So those we manage, either we blend them with our own funding, or they standalone funds as well. So, committee, I suppose most of the public out there think of the IDC in terms of our funding solutions, which is the column number 4 there, which is our direct funding to enterprises. So it's important to point out that we fund into the economy through our business partners. So through partnering with companies which are competitive players in the economy, and that's probably what we're most known for. However, we have increasingly emphasized that our role is more than just a direct funder. And in our current corporate plan, we've placed a particular emphasis on this role. So we also look to assist in growing the ecosystems that support various industries where we think there's potential for growth. We also do catalytic investments in projects and business development. So before a company is even competitive in the market, we support companies, particularly where we think there's opportunities in emerging sectors such as batteries, critical minerals within the green economy, etc. Then we also partner with other through programs and through funding. And like I said, this is a particular emphasis in the current period. As you can imagine, while we are a large corporation, the size of our balance sheet compared to the South African economy is small, and therefore we really need to work with others to increase our impact and achieve our objectives. And then the final, if we look at value creation, a couple of years ago, we said that we need to move from just doing post-investment monitoring to making sure that our business partners grow. So we see that as a value creation of our business partners, and we see ourselves as a partner in their growth. The focus areas, we focus in the real economy. So upstream, we do support agriculture and mining. We do support the enablers to economic growth, such as infrastructure, but we are mindful of the role that Development Bank play as well. And we do partner with them sometimes on transactions. And then our key focuses are in the industrial value chains, and particularly emerging value chains, critical minerals, energy storage, like I mentioned earlier, where we see opportunities for South Africa to grow a competitive advantage in those spaces. We cover mainly medium and large enterprises. Obviously with the development of economic development department and a ministry, and then that has a particular focus on small enterprises. We did have a subsidiary called CIFA, which is now merged with CEDA and is now housed within that portfolio. Excuse me. In terms of our geographical reach, it's South Africa and the rest of the continent. The point of this slide is really to show that we customize our funding products to meet the requirements of the business partners. So unlike a bank, we don't fund on the back of security. We look at a business plan and we say, does this business plan project a competitive, sustainable business into the future? and what would the funding requirements then be from IDC. We prefer to syndicate or crowd in additional funding from the private sector as much as possible. So we will take a lesser, for example, security position to facilitate that commercial funders come into the transaction. And we'll blend our finance where possible with concessionary funding and grant funding. But in terms of the kind of funding that we offer, it's everything from debt to equity to guarantees. So this is a snapshot of our new board. Most of the board members you will see joined during the course of last year, including our new chairperson, Gloria Serobe. And then we do have board members which provide continuity from the previous board, including our previous chair, Ms. Busi Mabuza. Sorry, Dave, can you go back? Maybe just to highlight that the CEO is a member of the board as well, and then the various chairs of our subcommittees. Mr. Rion Barnard chairs our board risk and sustainability. Ms. Tanya Cohen chairs board human capital committee. Excellency Ayanda Dlolo chairs the board social and ethics committee. Dr. Kate Metsi chairs our recently established independent complaints review panel, and Ms. Trafosa Romano chairs our board investment and board audit committee. Dr. Tebogo Makube is the representative from the department. If we can move, Dave. The executive team members. It's what I'd like to point out here is that we've really stabilized under the leadership of our CEO. We've really been able to stabilize the executive team at IDC. Prior to the CEO joining, we had a very high rotation of executives. On average, 3 a year were leaving the corporation, which meant that we would recycle our exco completely every 3 years or so, 3 or 4 years, which was a challenge for continuity and implementing our strategy. But as you'll see, we have managed to stabilize and fill most of the positions. We still have 2 vacancies, that of the COO and the executive for mining and metals. However, the CEO is in an advanced state of readiness to appoint those last 2 members as well. So let's go to the strategy, and it's centered on a number of key levers, and really sees us focusing on the future sectors that will give us the growth within South Africa. So at the core of it is our catalytic industrialization, as I've mentioned. I've covered the transformative growth, the partnership-led model, and regional integration. So those are at our core. But what I probably haven't mentioned is that we do have a renewed focus on financial sustainability. It's always something that we are aware of, particularly in light of the defensive investments which we do. Our portfolio has been leaning towards a higher risk categories. So it is something we do need to constantly keep an eye on and focus on ensuring that long term we are able to remain financially sustainable. And then organizational excellence. Again, it has been a focus for the new CEO, particularly focused on cultural renewal, and we have seen an improvement in the culture and the performance of the corporation internally, as well as digitalization within the corporation and looking at improving our systems and procedures to improve turnaround times. I can see Dave wants me to go faster. I think I've covered this in some aspects, Chair and DM. Maybe just to highlight that we have a high degree of alignment with the industrial development strategy, focusing on diversification. You'll see it's one of our key pillars, focusing on decarbonization, where we are focusing on catalyzing low carbon and green growth. And then digitalization is a running theme through all of our pathways to ensure that we modernize our industries of the future. I've touched on this, Chair, just to say that we are constantly balancing our financial sustainability with the achievement of our development objectives. And that's not to say that they are mutually exclusive or one's at the expense of the other. The best investment for us is one that has high development impact and good financial returns. And we are able to get investments like that. But it is necessary for us to keep a constant eye on the balance between our financial sustainability and delivering on our development mandate. I've just got a message that the slides are not moving. I'm not too sure, Chair, is that just one person?
On my side, it's moving. We are now on evolving our funding risk. Okay, thank you.
Okay, great, thank you. So maybe what I haven't highlighted particularly is the actually, I have covered all of these areas, really to say that we need to leverage more in terms of the balance sheet, that if we want to have the impact that we want to have. So we are looking at increasing our aspiration in terms of the impact within sectors, and we need to at least raise double the money from our partners for the money that we put into the economy. We need to make sure that we're always managing our risk and support our clients. Chair, maybe just to also highlight, one of the focuses is to improve our client service model. I did mention that we do have improvements across our systems and procedures to try and improve the client experience, but also that we are we are implementing digitalization. So we have a number of initiatives where we are digitalizing our systems and procedures, and this will make it more easier for clients to interact with us. Some of the complaints we often receive is that they don't get sufficient feedback on where they are in the process, and we expect that this will improve as we implement these measures. So some of those modules are already coming online, so we are seeing improvements. And also the improvements that we've seen in our cultural regeneration project will impact on client experience, because obviously if you have high performance culture being driven within the organization, it leads to better service to clients. I did mention earlier that Dr. Motubedi is the chair of our independent complaints review panel that has been set up. So that's an initiative under the new board to reinforce our response to complaints through the appointment of an independent panel, and that is fully functional currently. It has an independent secretariat. Dr. Motubedi chairs it with our chairman, who also sits on that committee, and it has independent panel members. I think I've touched touched on all of these areas. Maybe what I haven't emphasized in the new corporate plan is our focus on being a continental integrator and the builder of regional value chains. So we do think that our future is on the continent. We had seen in the past, recent past, that we had our investment outside of South Africa had declined. That was due to a number of challenges we had in those investments. We've adopted a new strategy which mitigates the risks that we saw in those investments outside of South Africa. So we now focus on not taking the bulk of the ticket, partnering with local investors, making sure we have boots on the ground, and also emphasizing the need to support regional value chains and their development that support both South African businesses and the businesses we invest in on the continent. We've also re-established a continental sector business unit, strategic business unit, so that unit will be responsible for driving the implementation of our continental strategy and investing on the continent. While we are implementing this strategy, we need to be responsive to the risks which are inherent in our environment, and it is a very risky environment at the moment. It does require that we respond to the headwinds that are present in the economy, but we also need to ensure that we are on top of the opportunities. So we do play this dual role of supporting businesses which are facing challenges, as long as they are deemed to be sustainable, and then also looking for opportunities which we believe are present in the environment. So this requires from us definitely a more disciplined and partnership-driven approach if we are to deliver on our mandate. I've covered the alignment issue, so I think we can skip here. We are aligned to the various policy initiatives, policy documents of government. We do believe we have a high level of alignment between our corporate plan and what the 7th administration is trying to achieve. Yes, Chair, I will wrap up in the next minute or two. These are our targets, Chair. I won't go through the detail, but just to show you that through our corporate plan, we are focusing on our investments. If you look at our KPIs, they focus on investments, they focus on labor absorption, how we leverage additional partners towards the achievement of our objective, how we grow exports, how we support businesses throughout the continent, and ensuring that we support transformation, both within industrialists, black-owned businesses, women and youth, but also focusing on spatial and rural development. So that is a key focus, perhaps which I haven't emphasized sufficiently. So it is one of our key focuses. There is KPI to ensure that we grow our businesses outside of metros to enable inclusive growth. And we have a number of initiatives to ensure that when we do invest, whether it's in renewable energy, mining, agriculture, which we normally invest in outside of the metros, we make sure that there's industrialization opportunities and localization within those regions as well. We have a very successful program called SME Connect, which connects local SMEs to large investments outside of the metros. Let me skip because I need to wrap up. There was also a request that we focus, that we provide the financial plans. We have given you the details, Chair, of the financial plans for the next 3 years. We do see from our own balance sheet 51.5 billion being dispersed. We do need to manage our impairments and non-performing loans. And as the DM mentioned in the beginning, we are looking at structural savings. So we did go back to our baseline budgets, and we are extracting savings of 1.6 billion rand over the course of the corporate plan. This gives a snapshot of where we see our capital allocation going. So the sectors which we will be focusing on, including energy and infrastructure, mining and metals, agro-processing, and machinery and equipment are some of the key sectors over the coming period. I've already touched on our transformation agenda, which ranges from supporting Black industrialists, women and youth entrepreneurs, Black-owned businesses, but also worker and community ownership. We do have quite large investments in support of work and community ownership, ensuring that we get a more broad-based empowerment out of our investments. Internally, most of our internal profile reflects the population of South Africa. Over 80% of our executives are Black, senior management over 90% Black, similarly with professionals and admin support. I think my time is up, so I won't go into these, Dave. I think, Chair, I think we can actually leave it at that. Thank you very much to you and the committee and DM for the support, and we look forward to engaging with the committee further. Thank you.
Thank you very much, Mr. Jarvis. Over to the NEF. Can I just ask, when we present, we don't need to go through the vision and the mission and the board members, etc., etc. If members have questions on the compilation of the board members, etc., that can be asked, because we seem to spend a lot of time on that instead of getting down to the nitty-gritties.
Thank you so much, Chairperson, for that guidance. I will show my picture briefly. Good morning, Honorable Chairperson, members of the committee. We also honor the Deputy Minister, the DG, as well as the Chairperson of the NEF, who is with us today, Dr. Untitled Chapter. Also greetings to all the colleagues who are here today. I will switch off my video, Chairperson, just to manage the bandwidth. My name is Mzi Daimani. I'm the CEO at the National Empowerment Fund. I have taken your guidance, Chairperson, so I will go swiftly through the presentation and focus on the key areas. Yes. So what we're going to be presenting on, Chairperson, is we will just skip through the slides on the mandate as well as strategic positioning of the NEF, but we will focus on how we deliver on the programs as well as the measurements that have been agreed with the government through our shareholder ministry, the DTIC. And also I will touch on the provincial alignment, and the CFO will assist me in dealing with the financial sustainability and the capital strategy of the organization. Briefly, the National Empowerment Fund were formed in terms of the NEF Act in order to support businesses, particularly SMEs and industrialists within the South African context. We also assist businesses that are growing, particularly within the Africa environment. How we are structured from a governance point of view, we report to the Minister of Trade, Industry and Competition, Minister Pakstau. We have a board of trustees, which is led by Dr. Muleko, who is part of the presentation today. And we've got various board subcommittees that assist the board in executing the mandate. I will skip through this slide in terms of how we are anchored in terms of the government policies. I think it's similar to what Mr. Jarvis was presenting from the IDC side. So I will not dwell on it, Chair. But maybe, Chair, if I can just touch in terms of how we deliver on our outcomes as an organization. We look through the growth agenda of the country for South Africa, as well as in the industrial policy. And then we are guided by the DTIC in terms of the focus areas execution, in terms of our strategy. We will show a table to the portfolio committee later on that actually shows how we have actually stratified those strategic areas and also what we aim to deliver on in this current financial year. So our aim is to ensure that we convert the strategy into opportunities and we play a role in job creation as well as creating business opportunities, transformation and inclusion in the country. How do we actually convert funding into economic outcomes? So what we have as our tools is capital. So we deploy capital into the economy, and we also have a strategy now of ensuring that we develop skills. So we raise funding from institutions like the SETAs and other organizations, and we utilize that funding in order to create job opportunities, particularly for entry-level jobs for graduates, because as a country, we do have a growing challenge of unemployed young people in the country. So we've had to relook our strategy to make sure that we play a meaningful role in the skills development area. We also focus on ensuring that our funding is blended in order for us to reach out to some of the areas that we would like to be in, like the rural areas and the townships and other broad-based structures. You do need to have funding in the form of grants and other blended finance. So we've also, we've not been capitalized by the fiscus for over 10 years now. So we've been recycling the funds that we have. But what we do is that we do raise funding from various institutions that help us to blend the funding that we have. So we invest the funds and we collect them, and then we recycle those funds. But in order to ensure that those funds can be affordable even to the rural areas, we raise the blended finance that assists us to deploy those funding through a programmatic approach. And so the programs that we run is, I will talk to the aggregator programs later on, as well as the other program that the government is working on that the NEF has been tasked in order to manage. The project management office of is the Transformation Fund project. We are hopeful, but the DTIC will make announcements at the right time as to how that program is going to be executed. But we believe that when it comes, it will actually assist in order to ensure that we have more economic impact. So we fund SMMEs, we create jobs, and we also fund bigger business. So we also have industrial businesses. So our mandate focuses on variety of segments of the economy in order to make sure that we create the employment opportunities and we also create the markets that assist those businesses to become sustainable. So we execute our mandate in terms of a sectoral approach. There are various sectors that have been identified by government in its policies, like IPEP and the GAIN policy, as well as MTDP, as the priority sectors that will assist the government to achieve the economic growth and job creation that we're looking for. Those sectors are listed on that slide, Chairperson. I will not list them one by one. They include agro-processing, digital services, as well as renewable energy space and tourism. So the NEF executes those particular initiatives through programs like the Black Industrialist Program, where we fund businesses that are at industrialist level. There are a couple of examples that I will touch on later on just to show how we actually interpret the Black Industrialist Program into action. The aggregator model, what we do there is that in order to ensure that we deal with the market access challenge, because sometimes businesses get funding, but they depend on one contract or one off-taker. And when something goes wrong with that off-taker, then the business faces challenges and sometimes business is closed. So in order to ensure that we diversify the markets for our business and also achieve the industrialist approach, we do fund certain programs like the fresh produce markets, as well as industrial programs that will become anchor markets for SMEs. So you'll find one aggregator that becomes a market to maybe 50 or 100 SMEs. So one of the challenges or weaknesses that we found in the development approach that we've been implementing as government is that we do not control the markets. So in order to ensure that we play a meaningful role in order to making more access to the markets, we implement the aggregator approach. We fund SMEs in various sectors, including the services industry, business process outsourcing, as well as wholesale and retail. We believe that those sectors are some of the sectors that actually absorb large numbers of employment, and hence our focus in supporting them. On the natural and cultural beneficiation side, we fund tourism businesses. We fund mainly in the rural areas. We've funded a lot of tourism establishment. And what we've actually discovered is that tourism is one of those sectors that actually employs people in large scale. If you fund one tourist establishment, the direct employment as well as the indirect employment opportunities and the impact in the communities themselves. Because we go to a community where there was no economic activity, and we realize that once we have established a tourism establishment, it starts to create opportunities for various other business opportunities within those communities. Just a few examples, Chairperson, of the businesses that we've supported. On the Black industrialist side, what we did, we supported a business that is called Mandini that does tire recycling. So we started with this business from what is known as bankable feasibility stage, and we then helped them to actually go into financial close where they establish their operations of factories, and they started to actually do the recycling themselves. They play a meaningful role in recycling waste tires, particularly in the mining industry, where there is a lot of waste tires that are actually lying fallow next to the mining establishment. So this business has got contracts with various mining houses. Some of them, they are also supporting it through enterprise development because they didn't have solutions in order to deal with the waste tires. So we're converting that into products, and we're also utilizing the waste in order to create job opportunities. We have managed to create 141 jobs through an investment of 48 million rand there. In terms of how we open up markets, we work with other entities. For instance, in the Mpumalanga fresh produce market, we've worked with the Mpumalanga provincial government that had started building up a fresh produce market. And we came in order to support the conclusion of the establishment of that market. It will be opened soon, and approximately 1,800 jobs will be created through that particular market. And this is one of those markets that will be utilized. We've started, for instance, to support smallholder farmers around Mpumalanga, including businesses that are owned by youth and people living with disability that are in the primary agriculture space that will be direct suppliers to the Mpumalanga market. Because currently, product is grown in provinces like Limpopo and Mpumalanga, and then it gets brought to the markets in Tshwane as well as in Johannesburg, and then it gets sent back there for retail purposes to those provinces where it was grown. So we believe that we can utilize the value chain and localize them within the various provinces. We're looking at other fresh produce markets, for instance, in other provinces, because we believe that this is one of those low-hanging fruit, because South Africa is very well endowed when it comes to agriculture, and the expertise is in the rural areas as well as in the provinces. And there is no reason why products, for instance, product that's grown in the Eastern Cape grain has to go and be kept in silos in the Free State and then get sent back to the Eastern Cape. We believe that we can change how the makeup of those markets is. Maybe one example in terms of also market access. This one is in the Gauteng province. We've partnered with the Gauteng Department of Agriculture and Rural Development in order to fund this business called SE Holdings. It's an aggregator of beans. So what we did, we formed a packaging facility for bean and other grain products, and they collect products from farmers, over 600 emerging farmers. They go and aggregate their products within this facility. It gets packaged and then it gets properly labeled, and value addition takes place at the facility, and then it gets distributed to the retail markets. So we are saying that by creating these markets, we are actually capturing the value, because in the agriculture space, for instance, value is more on the packaging and the processing side rather than the primary agriculture. So by making the emerging farmers to be partly shareholders in this facility, they also benefit from the processing of the products that they are producing. Skills development, Chairperson, I touched on it. For the unemployed youth, what we do, we work with various SETAs as well as other organizations where we actually utilize the resources that they have as well as our own resources and come up with structured programs in order to train people. We place them in the various companies that we have funded. So when we fund a company, it is a requirement that they also absorb a certain number of training opportunities. But what we say to them is that we will not actually put an additional burden on them in order to pay those salaries. We will actually utilize the funds we get from the SETAs in order to subsidize those salaries. All we're looking for them is so that they can give them opportunities. We are seeing that this kind of program is actually assisting us to make sure that we create more opportunities, because what we are seeing is that as a country, if we're saying we'll only create opportunities through the businesses we fund in the traditional way, we are not going to make a dent on the unemployment situation in the country. But if we come up with structured programs, we will be able to utilize those spaces. One of the examples that we can utilize in this space is the call centers. They actually is a big opportunity for South Africa in the business processing outsourcing space, where international organizations want to operate in the country. And it is an opportunity for us to support it in order to ensure that we take advantage of that. Otherwise, countries like India and other countries are taking up these opportunities from South Africa when we had the opportunity to commercialize them. So, Chairperson, we crowd in funding. For instance, the Drakensberg Food Processors Project, it is actually an apple juice processing facility, which is located in the Free State province in the Maluti-Pofong Special Economic Zone. So we've invested 50 million rand there, but the DTIC has also invested the critical infrastructure funding into the IDZ, and also Heineken has also invested the enterprise development financing into this project. And then we see a project here that is going to create 91 jobs, of which 41 are permanent, and then the rest will be the construction job in Free State, which is one of the provinces with high unemployment rate. Touching briefly on cultural beneficiation and also utilizing the beauty of our country. I think the tourism space creates a big opportunity for us as a country in order to ensure that we tap into it for economic growth. We've funded quite a number of tourism examples. The example on the screen there is an establishment that we have started in Mount Ailey. It's currently operating, and it employs people. It's owned majority by youth and women. We invested 12 million rand as an organization there. The last one, Chair, that I want to touch on is called Sitsong Tea, which is located in Limpopo. This business is actually manufacturing various teas that are grown in the local economy. And we've actually worked with the Black women in the community in order to create 251 jobs in their community through manufacturing of products, utilizing cultivars that are actually coming from their own communities within the Sekhukhune district. If you allow, I will skip this one and just go to how we're actually delivering, and then I'll touch on the KPIs as my last slide before I hand over to the CFO. So we focus on the scale of our impact, and we ensure that we blend the financing so that we can also reach the rural areas. And we ensure that we don't just put programs in place, but we deliver on them, and we have measurable KPIs. We are measured on an annual basis in terms of the KPIs that we agree with the DTIC. And the goal is to achieve job creation and economic impact, and also ensure that we work with both government and also private sector. We don't only rely on the private sector or only on government. We believe that economic growth has to be dealt with on a partnership approach. And we also need to make sure that the KPIs of the organization are aligned in terms of the impact that we want to achieve. These are the KPIs that we have. So what we do as an organization, I did say earlier on that we have not been capitalized by the government. So we utilize the funds that we have, we recycle them, and we also raise third-party funds. So we've been growing the impact of the organization and the funds that are available to invest. From 2022, 2023, we were around 692 million that we're investing. Where we are in the current financial year, 26-27, we invest 1.5 billion, and we actually seeing that that is growing over the years, because what we're seeing is that even the partners that we work with, where we raise funding, when we give them the impact reports, then they actually keep coming back, because more than half of the third-party funds that we are raising are repeat funding, because the partners are seeing the impact of the work that we are doing when we give them the reports and the results that we are achieving. I will not, Chairperson, read each of the KPIs there. These are the KPIs that I've spoken to. Maybe to mention here that we actually, in terms of the number of businesses that we support, we are accelerating that. Last year, the target was at 85%, and this year it's almost double at 173. So we are saying that in terms of the volumes and the scale of our impact, we are increasing that significantly. And the aggregator program is assisting us to give us the numbers, as well as other programs that we are focusing on that focus on various initiatives. When it comes to jobs, under 2.1 there, we focus on new jobs created. We focus on jobs saved. What we're saying about jobs saved is that there are various sectors that are shedding jobs. If we just focus on creating new jobs, we are actually going to be counterproductive, because we'll be creating new jobs on one side whilst we're losing jobs in numbers on the other side. And hence the focus is also on saving the jobs. So this is entities that should have closed down, that should have retrenched, and we intervened and actually supported them in order to save those jobs. And also in terms of the youth placements, those are the entry-level jobs, because a lot of the young people that are coming out of our tertiary institutions, they struggle to secure opportunities because most entities require experience. So what we are saying is that we're creating those opportunities for them to get that experience. And we are very pleased with the results that we're seeing, because we're seeing some of the young people that we've supported. Some of them are now managers in big organizations, and some of them have actually gone to work overseas. So these are also some of the other KPIs that we have. Most of these on the slides are more internally focused, so I will not go through each one of them. What we've done in terms of the provincial focus, Chairperson, we've actually now come up with a strategy where we want to ensure that there is equitable distribution of our products across all provinces. And what our board is saying is that we need to make sure that even in provinces where there is the economy is depressed, we need to put more effort in coming up with initiatives that are actually assisting us to have impact in those provinces. And that's one of the key focus areas for us in this current financial year. So this slide just shows the spread of our portfolio in terms of the provinces and also the various initiatives that we have in those provinces. Chairperson, with your permission, I'll just request the CFO to touch on the financial aspect. Thank you.
Thank you. Please, just before you take over, you have actually run out of time, but we'll give you another 5 minutes. Thank you.
Thank you, Chair, and the members. In the interest of time, I'll just provide a summary. So over the last 2 years, as NEF, we have disbursed 2 billion, and in the same period, we collected 1.2 billion. Whereas our average repayment period, it's 5 years. So we are doing exceptionally well on the collection. What it means is that we are able to collect the money that we will lend in addition to the jobs that gets to be maintained and created. So over the MTEF period, we are looking at disbursing 5 billion, which will support and create 37,000 jobs. But unfortunately, our balance sheet can only contribute 2 billion out of that 5.25. So what it means is that there is a funding gap of 3.2 billion, which the NEF is supposed to go out and raise. And it is something that it's an unfortunate situation, because when you look at the National Empowerment Act, the NEF was supposed to be funded, amongst others, the parliamentary appropriation. So that means now we double up the time, because we need to deliver on the APP targets, but at the same time, we need to go out there and look for funding. So we will really appreciate the support that can come from Parliament through the appropriation allocation. So same period, we're looking at 37 million jobs new, and as well as the ones that will be maintained. So if we get the sufficient allocation, I'm sure we can double up the collections, the disbursements, as well as the number of jobs that we can be created. I'll stop there in the interest of time. Thank you, Chair.
Thank you, Chairperson. That's the end.
Thank you very much for that. Over to ECIC.
Good morning, Chairperson, DM, DG, and honorable members. It's Linda, the CEO of ECIC. I am putting the presentation on the screen. Yes. Thank you for the opportunity to present ECIC's corporate plan for financial year 2026-2027. As the Export Credit Insurance Corporation, our mandate is simple as articulated in DM's opening remarks. It is to enable South African exporters to compete globally, to support investment into the continent and the rest of the world, to create jobs here at home, and to do so while we are safeguarding the financial resources that are entrusted on us by the policyholders. With your permission, Chairperson, I'll briefly take the committee through our mandate, our strategy, our financial position, and the outcomes that we intend to deliver in this financial year. I am accompanied by the COO, Mr. Gilbert Mapula, as well as our CFO, Tandom Katazo, who would be sharing additional information as we go through the slide. I am taking guidance in terms of time limitation, and I will just highlight key insights from each slide and not spend a lot of time on the details, assuming that the presentation has been read. This slide explains who we are as ECIC. Unlike our colleagues that have gone before us, we do not provide funding. However, we provide insurance that gives banks and exporters and other DFIs the confidence to finance South African goods and services into markets where commercial or political risks would otherwise prevent such investments. Our expanded short-term mandate also enables us to support more manufacturers, priority sectors, and SMMEs that is aligned to the DTIC's master plan. The value of ECIC extends far beyond insurance. Every transaction that we support has the potential to unlock exports in South Africa, sustain South African businesses, and create employment in our country. We also work proactively with borrowers and lenders to resolve challenges before claims actually arise by protecting both the public balance sheet and the South African commercial interest of our exporters. In terms of our organizational structure, it reflects a governance model that is really built around accountability. The role of our board is to provide oversight, while the role of management is to execute on our strategy and deliver on the objectives that we have set forth in the corporate plan. We continue to strengthen our leadership capability and governance so that ECIC remains transparent, financially disciplined, and operationally effective. If you look at the structure of our board, we've got various subcommittees that reports into the board. Of particular importance, I want to highlight to the chairperson in this committee is the role of internal audit. It reports directly into our audit committee, as well as IHEF, which is the head of the actuarial function that reports directly into the Finance and Investment Committee. And that is to ensure transparency and financial sustainability and discipline of our organization as required by the regulatory authority, the Prudential Authority. We do have gaps in our leadership capacity. We currently have 3 vacancies, which we are well underway to capacitate. One is the Chief Underwriting Officer. We have started the recruitment process working with a headhunter. We also have a vacancy in the Chief Actuarial and Investment Portfolio. Similarly, we are working with a headhunter to fill up that position. And the last one is the Chief Operation Officer. We concluded interviews today. So for the COO, we're looking to conclude the process by the end of the month and make offers. The other 2, we are looking to conclude the process by the end of September and make offers to ensure that we've got the right capability and capacity to execute on our strategic objectives. Chairperson, our strengths include the strong capital position that we hold as ECIC. We've got sound governance as demonstrated by our board and exco structures. We also have well-established relationships with the financial institution in the country to make sure that we can collaborate and unlock the much needed capital to enable transactions into the continent. At the same time, we do recognize that there are areas that require improvement. If we look inward, we've got a lot of manual processes, and we are implementing systems to make sure that we can digitize the internal processes and enable the institution or the organization to execute our priorities with much needed speed. We also have a lot of portfolio concentration in terms of our transactions in certain sectors, which we will go through in a moment when we get to our strategy slide. We also similarly have concentration in specific jurisdiction in the continent that heighten our risk exposure. We are working with our board to ensure that we can come up with strategies that ensure that we can continue to underwrite transactions and grow exports in the country, but do so responsibly in terms of how we mitigate risk in those geographies. Our opportunities really lie in the AFCFTA and the strategic partnerships that we have built with the likes of Afrexim Bank and the local commercial banks. We see opportunities in the green economy, while the global uncertainties that exist reinforce the importance of prudent risk management. Hence, I indicated earlier on the role that the internal audit and the HAF play in our organization, as well as making sure that when we underwrite, we manage risk and we manage risk deliberately. What I want to highlight on this slide, Chairperson and the members, is really around the financial strength and sustainability of ECIC. We do agree that developmental objectives and financial sustainability must go together. And therefore, we remain well capitalized and financially resilient. And I'll take us through the numbers in a moment. And the capital muscle that we have allow us to support our exporters without compromising the prudent underwriting that I keep putting a lot of emphasis on. We must remember that the assets under management that we hold, it's money that belongs to policy holders. And so we therefore need to manage it and manage it responsibly. And ultimately, our success is measured by sustainable development impact and not just simply the financial performance. So if we take a look at the numbers, we're sitting with 9 billion rands, and that is the asset under management. It's the monies that belong to our policy holders. And we also sitting well above the regulatory requirements in terms of our ECR and SCR. Just to reflect a moment, Chairperson, ECR is one of the most important measures of ECIC's financial health. It indicates whether we have enough capital to continue meeting our obligations, which is paying claims, under severe plausible stress condition that may happen. So a ratio of 100% is really good. We are actually currently sitting at 344%, which gives this committee a sense of the prudent risk management at ECIC. And this is an internal measure. In terms of regulatory measure, which is our SCR, this measures the minimum amount of capital that the regulator requires ECIC to hold so that we can continue to withstand major unexpected losses, but still honor our commitment to our policy holders. If we reflect for a moment on the economic impact that ECIC has made over the past decade, $1.9 billion should translate into 26.1 billion rands of loans that we've supported of our exporters. That has resulted in creating 41,527 jobs. In terms of the past financial year, we did not do really well, Chairperson in the committee. Only 128 jobs were created. And this is due to the lack in terms of some of the transactions that we had hoped that will go live, be effective in the past financial year, which didn't, and we are hoping that they will come through in this current financial year. I am going to hand over to our COO, who's going to spend a little bit of time unpacking the details of our strategy as well as our objectives and targets for the year, and the economic impact that we seek or aim to make as ECIC. And then he'll hand over to the CFO for any financial impact numbers that she may wish to articulate. So I'll hand over to Gilbert, our COO chairperson.
Thank you, CE. Thank you, Chair, DM and DG, and fellow colleagues from IDC and NEF. So on this slide, we're just showing, the competitiveness of the other ECAs versus ECIC. And the big factor, if you look at this, is the fact that we do not have a lending arm. I mean, if you look at the export support from the other ECAs, you can see the numbers are quite huge, $10 billion, and also the market share that they have, and the areas of success that they focus on. So obviously, if we do have an Exim Bank funding arm, I think it will take us, very far in terms of providing support to the exporters that really need the assistance from ECIC, as well as the funding from the Exim Bank. Next slide. So on this slide, we're just showing, our choices. What is it that we need to do, to really advance the business of ECIC, the markets that we need to look at, the products, and again, the Exim Bank. And again, there, when you look at the markets and the geographic areas that we're targeting, SADC still remains our primary market. We do see a lot of transactions that are coming out of this region. And then East Africa is one of them that we're trying to penetrate. And then obviously now we're also looking at, select markets in the Middle East, Saudi Arabia, Oman, as well as Malaysia. Then in terms of the sectors, energy and renewables are key. Oil and gas is very key. It's one of the sectors where we've got a number of projects. And then we're also looking at aerospace and defense. And here, we're looking at the South African market sector itself. We've had engagement with the sector months ago, and it was very interesting that they're exporting a lot. I mean, last year they exported equipment worth 10.5 billion without our assistance. And when you look at the potential for that sector, I mean, it can create a lot of jobs. It's got a potential to export 30 billion rand worth of exports in a year. And it's not just exports, it also provides, an opportunity to create products, that drive technological advances that can be used in the military, our national security, and also our civil capability. And again, those can also be used for civilian purposes. We're talking about drones, that can be used there. We're also talking about some of the vehicles that can be used for humanitarian purposes. So we are going to be making an announcement very soon in terms of our intervention. Then mining, medical equipment, these are some of the sectors that we're looking at. Then in terms of the products, yes, we do have an existing suite of products that we can really look at and improve. Then we're also looking at an opportunity to produce new products that will enhance our product offering. Things like invoice discounting and factoring, something that we didn't do, cover for LCs. Those are new products that will be coming online. Then in terms of strategic partnerships, this is very important, especially if we are to penetrate the African market. We do have a partnership with the Afrexim Bank, where they are providing us with the startup program, South African Trade and Investment Promotion Program. And that program has got a limit of about $3 billion, which Afrexim Bank is availing to support projects, mainly in the SADC region and other regions of the continent. And there we've got an opportunity to syndicate with them, fund projects alongside each other. We provide insurance, they provide the funding, or we use, their balance sheet or the program itself for risk management by utilizing their guarantees. Then we can also use reinsurance to reduce our exposure to some of the big projects such as LNG projects. And again, you're partnering with the private insurers. So that's very important. Then the other partnership that is also very key is with South African banks and DFIs. those still remain our biggest sources of funds. So, one of the things that we've been trying to address with the commercial banks is funding to the defense sector. They do have restrictions, in their funding policies where they cannot file arms due to the fact that they can be used in wars. So we are also trying to deal with that stigma, to try to reorientate them, to look at the positive aspects of the defense industry, especially when it comes to dual usage of the technology. There's a lot of benefits in terms of supporting this industry, and also in terms of growing the expertise. I mean, it's one of the problems that we picked up was that, a lot of our engineers moved away, because of lack of projects, and also due to the funding of the DoD. Now we can play a meaningful role in supporting this industry if we grow the exports and we support their technological innovations. It will go a long way in reclaiming some of the lost ground. Then the Exim Bank, I think, it's very important. The statistics that we've shown there, they are quite telling on their own. So they do indicate a gap in our funding ecosystem. So we do need a dedicated entity that will fund exports. Next slide. Then on this slide, we're summarizing our strategic goals that are also aligned with the DTIC's focus areas. The main areas of focus are about 5. One of them is export growth. That is the big one because it resonates with our mandate. It's where we need to be playing a meaningful role. So it's divided in 3 areas: the underwriting, where we need to approve projects worth about $530 million for the MLT business. And then for the STI, we're targeting about $180 million worth of projects. Then in terms of the veil of disbursements, this one allows us to track the veil of exports that have been supported. For the MLT business, we're targeting about $355 million. And then for the STI, which is the short term, $40 million. And then combined, we're targeting a gross premium of about $180 million. I've already touched on the strategic partnerships. I will just fill in those other areas that I didn't touch. We are pursuing reinsurance agreement with a number of ECAs, such as Standard Shore and the Exim Banks, Saudi Arabia. I think we're almost close to finalizing the Saudi Exim reinsurance agreement. And then we also have an existing one with Nexi. And the reason why we're doing this is because there's a lot of companies from some of these countries, Japan, China, and Saudi Arabia, that are utilizing, South Africa as a base, to export into Africa and elsewhere on the continent. So we're partnering with them. We want to make sure that we benefit out of the reinsurance agreements from the different ECAs that supports their local companies that are operating in SA. So one of the examples is the Nexi transaction, is the Nexi reinsurance agreement, where we've got a transaction with NEC. They are deploying, technological equipment, to support agricultural projects. That software, it allows the tracking of the fertilizers, the distribution thereof, and also it helps them to track the products in terms of whether the fertilizer is effective or not, and they can make adjustments. So again, if we close that transaction, it will be eligible to be reinsured by Nexi, and that frees our balance sheet and gives us the opportunity to underwrite more projects. I've already touched on the Exim Bank. I'm not going to go into the details of that again. Then the second strategic goal is economic transformation. Again, here we are targeting level 1 status. And we have been doing well on this aspect. When you compare us with other entities, we have been level 1, for more than 9 times, even in the previous year that we just ended. We are on course to get level 1. The verification agency is busy with the work. They're verifying and confirming our numbers, but we are very confident that we'll still be level 1. And we are aiming to continue on that trajectory going forward. Again, here, we are also targeting 20 SMEs that need to participate in the transaction that we underwrite. Obviously, the big challenge that we have is that we deal with EPC contractors, mainly foreign EPC contractors, and some of the projects are very specialized. But what has been very comforting is the discussion that we're having with these companies that are interested in our supply value chains, to really target some of the SMEs, build their capacity, expose them to some of the big projects. And I'm hoping that over time, this will bear fruits. Obviously, one thing that we need to note is that our construction sector has gone through some challenges. I think that can be seen on the quarterly economic performance numbers. The construction sector is still lagging behind quite a lot. We've lost a number of companies. We've also lost the ability to aggregate. Obviously, through our work, supporting cross-border projects, that gives them opportunity to subcontract and to try by all means to revive our construction industry. We're now dealing with companies such as Sun Hydro. It's a Chinese EPC that is located here in South Africa. They are executing projects over the continent. So it's one of the partnerships that we're looking at, to really use that as a channel to revive our industry. Then we're targeting 10,000 job opportunities that could be created, or sustained in our manufacturing sector through those exports, on the transaction that we're supporting. And again, here, over the 5-year period, we're targeting about 70,000, job opportunities. Then the third strategic goal is operational efficiency. Again, here we're looking at our processes. How can we improve our efficiency? We are implementing, the customer relation management system. We've already gone through the tender process. We are now also targeting to implement the IMS. We will be going on a procurement process. Obviously, this part of the technology has been very challenging because it's not something that you can get over the shelf. Many of the ECAs have developed, the system in-house. They've paid a lot of money. So we are at an advantage because many of these ECAs have gone through the challenges. So we do not have to go through them. We should be able to implement the system very quickly. Then the fourth strategic goal, financial sustainability. We are conscious of costs. We do not want to run the business with runaway costs. We are targeting 80% of the combined ratio. And this ratio, it looks into three things. Our claims costs, operational costs is our premium revenue. So we should be able to make this, run the business very efficiently. Then the other part that we're looking at is the investment. We do have a pool of investment. As the CEO said, we've got 9 billion, that's sitting, that's assets under management. It's got there's 2 portfolios, the dollar portfolio and the rand portfolio. These funds are sitting with various fund managers. And again, we're looking at a composite benchmark, performance, a composite benchmark performance target, of that. Yeah, at least we need to exceed that by 1%. The portfolio has got different benchmarks. So the composite benchmark plus 1%, that will be our target, measure our efficiency there. Then we also have the ECR and the SCR. The CEO has spoken about this. The ECR is our internal measure of capital. The SCR is solvency capital ratio. This is the statutory or regulated ratio that we measure our capital. Whether are we still good to pay claims, whether are we still good to underwrite. So it serves 2 things. It gives us the capacity to underwrite. It also looks at our capital position in terms of settling the claims. Then the last one is culture transformation. Again, here we're looking at our culture entropy, dealing with cultural issues, with employee issues and addressing them. And again, here we're targeting a score of below 30%. And the last part is around the succession coverage. I think we've run over a couple of years with vacancies. So here we're trying to address that by building capacity internally. We need to have an efficient succession program that prepare internal candidates to take over positions so that we do not sit for a long period without filling those positions. Next slide.
Mr.
Makatarazu? Yes, I'll pause.
We need to start wrapping up, please, because I see you on slide 9 of 35. So could you summarize the rest of your presentation? Thank you.
Thank you, Chairperson. We deliberately spent a lot of time on the previous slide and this slide because from slide number 10 onwards, it's continuing to unpack exactly what is in the slide. So we are comfortable, Chairperson, that we can proceed, take questions, if any, or follow your process, because all the slides that follow just unpack these into far more granular level of detail, Chairperson.
Thank you very much for that, Ms. Soroka. Colleagues, we've had the presentation from 3 entities of DTIC. I would like to state that we are not going to have an interaction like we normally do. If you pose your questions, pose them to 3 entities, and when everybody has posed their questions, we will request the different entities to respond to those questions. So could I just see show of hands who would like to ask questions? I see Honorable Pinar, Honorable Montwedi. Going. Honorable Modise, welcome to the platform. Honorable van den Berg. Let's just give the other members an opportunity. All right. In that order, Honorable Pinar, over to you.
Thank you, Chairperson. Good morning, colleagues. It's nice to have everyone here again. DM, it's nice to have you as well. You sound a bit sick this morning. I hope you recover very soon. Chairperson, I'd like to start with the IDC with Mr. Jarvis. Mr. Jarvis, I found a few contradictions in your presentation. You speak about green energy and sustainability investment, and however, the majority of your funding is aimed towards larger companies, which are heavy carbon, heavy industries, your Sasol's, your Exarus, your Transnet. I mean, it's like you're painting a picture, but the reality is you're investing the majority of your investments in these heavy carbon industries. I mean, if I look deeply into it, 84% of your funding is headed towards large companies, about 16 billion apparently, and only 16%, about 2.6 billion, is on SMMEs. I just want to know the contradiction there, because you make it sound like you're investing in, SMMEs, young and upcoming Black industrialists, but the reality is you are the majority of your investing is in major industrialized companies. So if you just give us clarity there and the contradiction there in your presentation. Mr. Jarvis, I also want to know, you spoke about the goal of 25% investing in youth and women-owned companies. That's your goal. However, how much are you currently investing? And I want a figure, please. How much are you investing and how many in youth-owned and women-owned companies? Because again, I'm very sure that figure does not speak to the realities of your investing structure. Then the NEF, Mr. Damon, thank you for your presentation. You spoke a lot about economic growth and job creation, and that's something this GNU government supports, of course, and will support as far as we can. However, I want to please take you to slide number 21 about the, if I'm allowed, Chairperson, if he can please go to slide 21, if that would be allowed, in the NEF's presentation.
NEF, can I ask you, Diamani, to flight your presentation and go to slide 21? Thank you.
Yes, Chairperson, if you give me a moment. Okay.
Sorry, it's the one before this. Oh, no, this is the right one. Thank you. No, sorry, that's the correct one. Thank you, Chairperson. Chair, I want to know, there's a lot of not applicable there, and I just want clarity from the presenter. I mean, the periods going forward for 2026, 2027, 2027, 2028 looks all great. I want to know the information that's missing exactly, because I agree with the presenter. A number of jobs created, a number of jobs saved. I think that is critical, and that should be the focus area. You want to cover both sides. We have a prediction for the years coming. I want to know, based on in the previous financial years, what happened there. Why is the information not there? Because any predictor of future success is obviously past successes. So I just want to know why there's no information there in those columns for the previous financial years, please. And then, sir, my last question for you is, you spoke about, the importance of reform and investing in BEE companies, but at the end of the day, this is about job creation. Now, if a young entrepreneur of 35 years old who's a white male applies for funding, and he says, based on his business model, and he can create 100 new jobs, but it's a 100% white-owned company. Are you saying his funding will be declined based on his race? I just want a very simple answer to that. I don't need you to give me a political, complicated answer, please. Because at the end of the day, Chairperson said, my goal here is jobs are jobs. Whether it's created by, it doesn't matter who's creating jobs. We want to create jobs. So I just want to know, will that funding request be denied based on the color of somebody's skin? Thank you, Chair. Then the last presenter, the ECIC, through my research, I think you play a critical role in the industry, especially because there is definitely a gap within the market for entities that are who can't find cover based on political risks, especially in African countries, because that's mostly where you cover. There are some big. Obviously, there is some risks. I know recently you made a big payment or payout to something happening in Ghana as well. But I want to know more specifically internally. For about 3 years, the CEO and the COO was the same person. That's never a good sign. But luckily that's been somewhat resolved now. But you also spoke about the 3 other senior positions that are vacant. My question for you is how long, and I know there was 2 or 3 presenters on the ECIC, so I don't know who's going to answer this, but there are 3 vacant positions, senior vacant positions there that you spoke about, the CEO and the 2 others. And I want to know why were they vacant for so long, and how long were they vacant for? And the reasons they're there for. What was the reason that they were vacant for so long? Thank you, Chair. Those are my questions.
Thank you very much. Honourable Montwedi.
Thank you very much. A very good morning to everyone. I hope I'm audible. I'm on the ground.
Yes.
Network is a bit of a problem on campaigns. I think I'm fine, Chairperson.
Yes, you're audible. Thank
I'm
you,
audible.
Honourable. Yes,
Thank you
you.
very much. Thank you very much. No, I think one has to start by saying the reality is that As a country today, we are where we are because of the deliberate decision by the apartheid government to fund and deliberately exclude all our black people and give all the financial support to white-owned companies. And we welcome the intervention by government to ensure that it brings our people into it makes sure that it empowers our people. It gives them the capital to enter the market because black people were excluded before. We welcome all those programs that the NEF and the IDC they are implementing, which seeks to empower the marginalized people in this country. And you must do enough. You're not doing enough. You must do enough of that particular day. So I just have a few questions on the IDC and on the NEF. And the first question is that the presenter from the IDC did mention that they are building a regional value chain and that they are looking to grow into Africa as a destination. Now, I wanted to find out from the presenter from the department to say, with the current migration issues in South Africa, where most Black Africans are chased out and only white Africans are left in the country. I want to find out from you, how is this undermining your plans of making sure that you, as part of building the regional value chain, you do not fail in what you want to achieve in that aspect, especially growing into Africa? And then the other thing, Chair, is around issues that on the impairments and the distressed assets. The IDC indicated that the impairment rate remains extremely high at 29.7% for 26-27, with Foscor and Prila still classified as distressed strategic assets. Now, given that impairments of 29.7% and the ongoing losses at Fosco and Perilla, what concrete turnaround milestones have been achieved to date? And when will these subsidiaries stop eroding IDC's balance sheet? That is the first question, Chair. The second question is around transformation funding and the actual drawdowns. The IDC is committing about 6 billion to black industrialists, which is welcomed, but approvals often do not translate into disbursements. Now, of the 6 billion earmarked for black industrialists, what percentage has been disbursed? We're not talking about approved. Yes, approved, yes. You can tell us how much has been approved of the whole 6 billion, but the real question is what percentage has been disbursed? And what barriers are preventing entrepreneurs from drawing down on their approved facilities? The last question on the IDC, Chair, is around the gigafactory and the critical minerals feasibility. The critical minerals industrialization plan is positioned as the IDC's flagship program, yet anchor investors and offtake agreements are not confirmed. Now, for the gigafactory and the battery value chain initiative, which actor investments have formally committed capital and offtake agreements? And what is the IDC's own funding exposure relative to the private partners? Just one question to the NEF is that there's in their document where they're talking about pipeline quality versus the 49% disbursement growth. And on your APP, you are making more emphasis on pipeline quality for SMME, yet your disbursement must jump from 1.1 billion in 2024-2025 to 1.5 billion in 26-27. Now, pipeline quality, linking them to SMME, link SMME to industrial value chains with a total disbursement of 1.5 billion. How has the NEF validated that its current pipeline can absorb a 49% increase in disbursements without compromising due diligence standards or increasing impairment beyond already high at 40%. I think my last question there is around the digital workflow capacity, Chair. Is that when you look at the APP, only 40% digital workflow processing in 2026-2027, and percentage of funding applications processed through standardized digital workflow is 40% in this current financial year. Now, what specific bottlenecks prevent NEF from exceeding 40% digitalization in the 26-27, and how do these constraints affect turnaround times for high value program like the SMME and the aggregators? Those are my few questions. Thank you very much, Chair, for the opportunity, and to the presenters for the very good presentation they made. Thank you very much.
Thank you, Honourable Montwedi. Honourable Modise.
Angibonge Sihlalo. Firstly, let me apologize for joining the meeting late. I had to attend the Steering Committee on Commonwealth Parliamentary Conference preparatory meeting. And secondly, I joined the chorus in welcoming the presentation made. I have missed much of the presentation, but the fortunate part is that I had read the presentation as shared by Madia. I just want to confine myself to one question and one question only because I found it extremely interesting. I'm not sure which agency was presenting, but there's a presenter that spoke about the special economic zones and how much they've been spending in relation to that program. They made an example about a tire manufacturing or a tire recycling company somewhere in KZN, and specifically spoke about the Free State, the SEZ on the Free State, the one that is on the N3. I think it's Harrismith, yeah, Harrismith. And they specifically speaks about that SEZ and the program that they're doing there and the amount that they've spent. I'm not sure when was this because there's not clear as to when was this amount spent on that SEZ. I'm saying this because we had an opportunity to go to that SEZ and I do not remember seeing any of that program that they referred to. So I just want to know the dates, specific dates in which that program in that SEZ in the Free State was the amounts that were spent. When were they spent? In which financial year were that amount spent? Or when did the program start? That is the only question I have, Chair. The only request I have is that I am sitting here with a letter that is written by one Mr. Nikondema, whom I met now when we were in recess. Very frustrated. I don't want to go into details of the letter. The letter was supposed to have been sent to the minister herself or the deputy minister. In our engagement with Mr. Nikondema, I then made commitment that I don't think for now he needs to send this letter to the minister or the deputy minister, but we need to speak to the officials. And in our engagement, I can confirm here that what Mr. Nikondema needs is the official from the National Empowerment Fund. Now, Chair, with this platform, and if you allow me, I want to ask the National Empowerment Fund here and now that is there someone that is going to meet with Mr. Nikondema? If so, when? What date is that? What time and where? So that after this meeting, I can go back to Mr. Nikondema and confirm with him that, like I promised, that he doesn't need to send a letter to the minister. He has a meeting scheduled with the National Empowerment Fund, and this is the person that you are going to meet when you get there. This is the date and this is the time of the meeting. Thank you, Chair.
Thank you very much, Honourable Modise. In light of what you have now tabled, could I ask that you and Mr. Dayamani, the CEO, or the DG, Mr. Hamilton, he has now excused himself, just speak to one another with regard to what you have just said, so that we take it off this platform and you can engage privately with either of them. Thank you very much. Over to you, Honourable van den Berg.
Thank you, Chair. I'm just getting to my notes quickly. There we go. Well, I would like to compliment Mr. Diamani that he has opened the window and shown us how and where they create these jobs by growing industry. Also, to the NEF, thank you for a good financial model. I would certainly advocate that more funding be allocated to the NEF rather than being spent unproductively in all kinds of projects that claim thousands of jobs, but never being proven to this committee. It would be nice if all state entities would achieve this level of reporting where we can actually see what the money does and how it plays a role. Now, how does the NEF and IDC make sure that their areas of operation are not overlapping? If you can help me with that. Then also to the IDC, you refer to your clients a lot, but can you not also perhaps open the window a bit to give us a sneak peek to who these clients are? What projects have recently been executed by the IDC, and what interesting things are happening in your near future? We all know the effect of overinvestment in staff and how it had a detrimental effect on local governments, um, and they not being able to reinvest funds into their own service infrastructure. My question to all the entities are, how are you managing your institutions to steer clear from falling into this trap of overstaffing and underperforming? Then also another last general question. Is it possible for young industrialists to simply work the financing system by getting bursaries, loans, investments, grants, etc., and thereby to find personal wealth while not really creating real virgin industrial business? If one of you can perhaps give me an answer to that. And that is it. Thank you very much.
Thank you very much, Honourable van den Berg. I don't see any other hands up, so I will take the platform. I have very simple questions because the majority of the questions have been asked. Now, with regard to the IDC, can you say to us that by the end of this financial year, what tangible outcomes can we as the committee and the broader South Africans be able to see as a direct result of your work? And then in the presentation, you spoke about the decline in investment outside South Africa. Now, what factors contributed to this decline, and how will your new strategy restore investment in a way that strengthens South African industries and creates the necessary jobs here at home, and the support, and how will you support our export competitiveness? Now, the NEF, looking beyond the amount of money that has been dispersed, what evidence are you able to provide that the businesses you have supported are becoming sustainable and are creating lasting economic opportunities? And then in the presentation, you also spoke about the fresh produce market in Mpumalanga. And coming from Mpumalanga, I know exactly what's going on there, and it has cost the taxpayer absolutely a pocket full of money because they are so far behind. And I understand from the department, from the legislature, people working on it, they are working towards October opening this. I'm not very, very certain this will happen. Now, what I need from you is then, has the NEF already identified businesses that will benefit from this project once it's fully operational? Or are you only going to support once the market is fully commissioned? Now, with regard to your blended finance, let me just see where I wrote my question. No, I can't find it. Let's just see where I wrote the blended finance question. Okay. Unlike the Department of SETFA, which we know identifies specific programs such as entrepreneurship funds, incubation township and rural programs, women and youth funds, and supplier funds, I would like to know that the following: your corporate plan recognizes that unemployment, particularly amongst our youth, remains one of our biggest challenges. And beyond providing finance, what structured programs or interventions will you implement during the 26-27 financial year that are specifically designed to reduce unemployment and improve the labor absorption? And how will this committee be able to measure whether those interventions have translated?
Chair, have I lost you?
I think it's not just you. I can't hear anything. Mardia?
Hi, Mr. van den Berg, Mr. Pienaar. She is on the platform and she's not muted, so I don't know if she maybe just had a network challenge. I'm just going to let her know that we can't hear her quickly.
Take over Pinar in the meantime, because she will come back and ask the question again. In the meantime, facilitate the response.
That's. I agree with you there, Honorable Modise. Colleagues, while waiting for our chair, I'll be acting in the meantime. I'm sure the Honorable Chairperson will rephrase a question. Honorable DM, before I want to give over, let's first start with the department, with your departments, so they can respond to some of the questions raised. I don't know if you want to start off, DM, or can I go directly to IDC, Mr. Jarvis?
DM, can I start?
I think you can go. It's fine. We will have the DM come in at the end. That's fine.
Okay. Thank you, Chair. So maybe, Chair, let me start with the issues which you raised, which are important. And I think our approach would not see these as contradictions. We are supporting the economy of South Africa with our investments, and we are aware that it is a highly carbon intensive economy. So what we have to do is to support the economy we have and grow the economy that we want into the future. So, and we have played a fundamental role in that greening of the economy. We were a key de-risker of government's renewable energy program, and we continue to invest heavily in renewable energy. Our investments are north of 13 billion within a renewable energy program, and we've also been invested in wind turbines, solar, photovoltaic panel production, etc. So we have tried to support that industry. We also work with our existing business partners to get them to decarbonize. So we look at particular investments around their energy, but also their manufacturing processes to see how we can reduce their carbon footprint. So we acknowledge that we do support industries which do have a high carbon footprint, and we are aware of that. And we have adopted a number of guidelines to facilitate that, not only their carbon footprint, but also when it comes to water use, etc., that we see those footprints reducing over time. So in terms of the economy that we want, and maybe there were a couple of questions around this in a number of honourable members' queries. The strategies that we are promoting, whether it's green hydrogen, critical minerals, these are nascent strategies. We're still developing the ecosystems, but we have been investing. So in critical minerals, and maybe, Chair, it is worth mentioning that we will provide some written submission, because some of the questions have asked for quite specific numbers, which I won't be able to just produce offhand. So we will provide written submission to the committee during the course of next week that responds to some of the particular issues that have been raised. So we have invested. We've done a large investment in a copper mine in Palabora when it comes to critical minerals that has extended its life of mine. We've invested in battery precursors, the manufacture of battery precursors, both within South Africa and outside of South Africa. We're looking at projects in NEVs as well. We've approved funding for NEVs as well. We are also we've also invested in rare earth minerals. So we have 2 investments which we recently invested in rare earth minerals. So this is growing this critical minerals value chain, which we aren't at the point where I'll be able to respond to some of the issues which were raised by Honourable, I think it was Honourable Montweni, about the Gigafactory. But we will provide where we are with that in writing. Also working with our existing partners. So, for example, with Sasol, we do have an initiative, a green hydrogen initiative, similarly with AMSA. So that's how we look at growing these sectors, both with projects, looking at the ecosystems, as well as working with our existing business partners. There were a number of questions regarding the disbursements as opposed to approvals, and maybe linking to Chair of Committee's question. We can provide a number of case studies that will show how our investments actually where the rubber hits the road. So we can give examples of those investments in our written submission, which can cover these areas as well, these exciting growth areas in critical minerals, as well as some of the other work that we do. So in terms of disbursements, in 2025, we disbursed 3.7 billion rand to Black industrialists. We disbursed over 4 billion to Black-owned businesses. 3.6 billion was from our balance sheet, and 700 million from off-balance sheet. If I go to SME disbursements, which was one of the questions that were asked, we disbursed 1.6 billion to SMEs over the course of FY25, and that was made up of 1.1 billion of our own balance sheet funding and close to 600 million of off-balance sheet funding. Chair, I think there was also a question around youth disbursements, so I'm sure I'll just have to find that. Chair, then in terms of the regional value chains, so we obviously ensure that within our business partners, we do require them to honor the local regulations within those countries, as well as within South Africa. We know that government has seen that there may be a risk outside of South Africa because of the attitude of those countries to South African investors. and we are working hard on that. Our CEO in particular is very active in terms of addressing those challenges outside of the continent. She just returned from a trip from Zimbabwe. So we are looking at making sure that we do strengthen our ties with the other countries outside of South Africa. In terms of the chair of committee's question, the challenges that we saw outside of South Africa in terms of our investments, we had often take too large a ticket in proportion to the size of the investment. We didn't always have local partners besides our business partner, and we didn't have feet on the ground. So our new strategy addresses exactly these challenges. We will make sure that we take minority positions in investments outside of South Africa, work with local partners and other funders, and ensure that there are feet on the ground so that we're able to monitor these investments better. So we do think that, after having looked at the lessons learned, we have sufficient headroom to increase our investments outside South Africa in line with our regional value chains. Chair, I'm just looking at the other questions. In terms of there was a question around our operational costs. We did highlight that we are looking at our internal cost structures, and we are looking to save 1.6 billion over the next 3 years on our operating costs. We also, as Deputy Minister highlighted, engaged in a business transformation process currently, which is led by the CEO, and we are expecting that to also pay dividends in terms of improving our efficiencies. We do have a digital transformation strategy that includes introducing Microsoft Dynamics across the corporation to manage our processes, as well as artificial intelligence. So we are looking at efficiency gains there as well. So those are also some of the initiatives which we've embarked upon. I think maybe the last question I'll respond to is just around export competitiveness. It is a KPI for us to look at how we have supported businesses to export more during the financial year, so we can give the actual figures on that. In terms of, I think the last question I'll respond to, in terms of youth, we dispersed 600 million on balance sheet and 500 million off balance sheet to youth entrepreneurs. So that's companies that have more than 25% youth ownership during the course of 2025. So we'll provide all these figures in writing, Chair. I think they'll be easier to analyze then. On the question of subsidiaries, I'd like to hand over to my colleague Lucretia Kumalo. She is the executive for our client support and growth, which is our post-investment division, and she can speak to some of the issues around our subsidiaries.
Is she online? Oh,
yes,
thank you.
I am. Thanks, Chair. There were two questions regarding the subsidiaries that are posing some challenges for the IDC to manage. We stated that we are having challenges with Fosco. Fosco, we ran a turnaround strategy some years ago, which was being run together with the sales strategy. The turnaround did show significant improvements, and for 3 to 4 years, we saw improved performance across production as well as the profitability of the company. However, in the last year, they've had some couple of mishaps. There was the flood in Limpopo, there were some accidents, and of course, there was the war that happened, which has increased operating costs around the fertilizer value chain significantly globally, with many of the fertilizer companies shutting down their plants globally because of the price, particularly of sulfur and ammonia, which have tripled in a very short period of time. So we are seeing those losses coming in, and the teams are hard at work to find turnaround strategies on that. It is much more difficult than before because now you're working with or working against global risks and challenges that are really outside of management's control. But we are working with them to try and resolve those issues and find long-term sustainable solutions for Fosco. On Prila, it's something that we are also just working through because their issues stem from demand challenges in the country, and also the cost base of Prila as the only spinner in Africa, but purchasing very expensive cotton from our neighboring countries, also a little bit from local, and also some from Brazil. Because there's not enough demand, and the volumes need the demand to balance it out, we have found that Prila continues to be a loss-making business. So we are trying to work on this with other departments across to see if they could stimulate some demand for things like toweling and sheeting and t-shirts, because that's where that's where the cotton goes into. So if we could get significant demand, Prila would probably be sustainable. So that's something that we've requested assistance from, and we'll see how that goes. If that comes through, we do think that Prila then would be sustainable. But without the demand, especially in the textile industry, I think we're not going to be able to see turnarounds in that space without the demand. Thanks, Chair.
May I come in, Chair?
Yes, sorry,
Yeah,
I was cut off, so please carry on. Thank you.
Thank you, Chair. Chair, maybe on the issue of our KPIs, where it says not applicable. So what we did over the last 2 years, we worked through a process of reviewing the strategy of the organization, working with the DTIC and the shareholder ministry. And what ended up happening is that a lot of KPIs that we used to have, we changed them or removed them. So we ended up with a lot of new KPIs. And really the trust of the deliverables now is to say, let's focus on KPIs that give us results rather than process KPIs. For example, we used to have KPIs that's measured how much we have approved as transactions. So we've changed that now. We're measuring how much has gone into the economy rather than what has been approved, because the focus is more on the measurable outcomes. So those KPIs, they are NA for previous years because they were not there or they were not framed the way they are. And we started implementing them in the current financial year. So we will start measuring them going forward. And also, if you look, for instance, on the issue of jobs, we did not break down jobs to jobs saved and youth jobs. We only have one line of jobs. So we had to be more granular so that we can see the outcome. So the APP is more outcomes based at the moment than it used to be. Would we say no to a business that is 100% owned by a white male? And our Honorable Pinar said I must not give a political answer. So the answer I would give, because I'm not a politician, is to say the white male fellow citizen of South Africa must come and engage with us. Because what we're working on as the National Empowerment Fund is transformation, it's job creation, it's economic growth. So if we can find expression in their proposal, and also if we can find expression in them working with us in ensuring transformation of the economy, we would definitely discuss how we could actually work with that entrepreneur in financing opportunities and also creating opportunities for other businesses, because the National Empowerment Fund is not necessarily a racist institution, but it is an institution to deal with the legacy of apartheid and ensuring that we, all of us as fellow South Africans, we work together to transform the economy. So it's not necessarily political, it is more outcomes and ensuring that we implement the transformation agenda. And all of us, I think when we speak to various people, everyone recognizes that we need to make more opportunities available to people, and that some people from particularly the Black communities have been deprived of opportunities. So our responsibility is to ensure that we open opportunities for those communities. So we're happy to work with white South Africans, and we encourage them to come and speak to us. But the agenda is transformation. Now, when we talk about SMEs and how we're going to pivot in terms of the values of our approvals. So what has been happening is that as an organization, we have not had a shortage of approvals. We've got transactions that we've approved. Some of them we have not been able to disperse the funds because of the funding challenges. So the increase in the values is not necessarily going to affect our business, because in terms of our current infrastructure, it already caters for the values that we are projecting in those years. In fact, some of the approvals, we already had them. We just needed to make sure that we raise the funds in order to finance those opportunities. So the pipelines are there, and we continue to actually disperse them. And we do not compromise the quality of the pipelines by increasing the value of the impact of the work. Now, when it comes to special economic zones, and particularly the Maluti-Apofung SEZ, where we have approved a project. So what we are saying, one of the strategies, if the honorable members look at our KPIs, there is a strategy that we need to support SEZs and industrial parks. And what we're saying is that working with the DTIC, when we approve a project, linked to that would be what is known as critical infrastructure support from the DTIC. What that means is that for the SEZs itself, in order to finance the infrastructure, we get the approval from the DTIC. So that project was approved in the last financial year. It is not operational yet, because the work that is happening now is to actually refurbish the SEZ, and also we've ordered the equipment that needs to be there for manufacturing purposes. So I am comfortable if the committee members visit that SEZ over the next, maybe in a year's time, you will find that operation there being functional. So what we're saying that we have a responsibility to ensure that we revitalize the SEZs. That's linked to the Mpumalanga fresh produce market, Chair. So what happens is that indeed the honorable members are correct. The provincial government spent a lot of money in that, but that SEZs then could not operate because there was shortage of funding. So the funding that we approved is to complete the work, as to ensure that we assist with the work that is necessary in order to operationalize the SEZ, and that also to support the smallholder farmers. So we have started funding, particularly on the primary agriculture side. There are a number of enterprises that are actually on the ground that are planting or that are actually having animals in preparation for when this is operating. So we're not waiting for the SEZ to open. We have started supporting enterprises on the ground in preparation for the development work. So what we're saying is that where government has spent money, we should be able to come and actually complete that work if we see that the work is actually at a critical stage and we can able to get the projects operational. And that is what we've done in that particular SEZ. And when it comes to young industrialists and supporting businesses, more personal wealth creation, We fully agree, Chair, with the sentiments that are actually expressed by Honorable Van der Berg to say there are certain businesses you will not necessarily create jobs. You will not necessarily see some of the impact that we use when we measure projects. But when you see those projects in terms of the effects that they have in terms of wealth creation and also in terms of, particularly if you look at the digital space, you will find projects there that don't necessarily create many jobs, but in terms of the impact that they have economically, then you actually can see the benefits. So we're saying we should find a balance. We do support those projects in as much as we're focusing on job creation and other aspects. We also support projects that do economic growth. That's why we've had programs like entrepreneurship development and investor education. And we also focus on those kinds of businesses that gives those outcomes. I would ask Chair, maybe my colleague Zandile to touch in terms of the skills program and how we actually rolling that out, Chair. Thank you.
Thank you, Chair and the CEO. So, Chair, yes, the NEF has now, in terms of their strategy, also adopted the skill development strategy, which is really focused on creating jobs for youth. We've seen that we can't just only focus on creating opportunities for businesses, but we also had to make sure that some of our investees are also part of the solution, wherein we are partnering with them to place some of the youth that we have identified through the relationship we have established with CETAs. So it's working so well. I think the board adopted the strategy last year and in October, because our board started around October. But already since we started with this strategy, we're able to identify and place over 500 youth across South Africa, with more focus also on rural areas, Chair. So this year we have now decided to ramp it up to 2,500. This is empowered by the relationship we have established with organizations like your CETAs, where they are able to give us some capital, and we use our resources that we have, including our investees, to place this youth. Our strategy is also really focused on the absorption, because what we are saying to our partners, even investees, is that at least they must absorb about 60% of the beneficiaries that we are placing with them. And we are seeing that a lot of companies have been able to meet that. I think the slide where the CEO was showing one of the companies being Altitude, which is the BPO that we have started working with, they gave us the 100% absorption. We have placed around 50, and all of those beneficiaries have been absorbed at 100%. We are now expanding that. We are seeing another BPOs that are coming through to assist us, Chair. So I think it's quite a good strategy that is really helping us to ensure that we are also addressing the issue of unemployment. Thank you.
Thank you. Last one, Chair, on the digitization of workflows. Indeed, Chair, for the current financial year, we're starting at around 40%. But what we're saying is that digitization program, because we are developing a number of programs, our IT department, we have to bring more skills that are helping us with that program. And Chair, over the next 2 years, we are aiming to ensure that we ramp up to 100%. Yes, indeed, the more we digitize, the more efficiencies we'll get, and also the more it will reduce the time we do business. But it is certainly a program that we are working on. We've had to manage the budget issues there so that we don't outsource all the work, but it's certainly a program that we are hard at work on and we are implementing. Thank you very much, Chair.
Thank you. Does that now cover all the questions that were asked? Sorry, I missed. Okay, thank you very much. Can I just ask the members if all their questions were answered? I see Honourable Mudise's hands up. Over to you, Honourable Mudise.
Thank you, Chair. We missed, you made an input around the request for Mr. Nikontema and the NEF, and it has not been articulated here. I missed that request.
Okay, let me reiterate. I think we should forward that request to the DG, Mr. Hamilton, and see if he can assist the gentleman. He had to unfortunately excuse himself again. So just speak to Mardia so that we can see how we can set up a meeting between you and the DG, or get his details from Mardia, so that you can write to him to set up your own meeting with him. If that meets with your requirements, Honorable Modise.
I'll do that. It's just that the gentleman was frustrated with the part of the entities of the department, and the email, if I were to share it with you, that he wanted to send to the minister, is a very harsh email. Hence, I had requested him to give us an opportunity to intervene on his behalf. And I took the advantage that the NEF is in the meeting. All I wanted from them was to say, he can come on this day at this time, at this venue. There'll be people to meet that can help him. That's all. Thanks, Chair.
Okay, Mr. Diamani, can you respond to that from the NEF as the CEO, please, so that Honorable Modise has an answer?
Yes,
because we
indeed,
cannot
Chair.
leave our people out there.
Yes, no, my apologies, Chair. Indeed, Chair, we appreciate the feedback from Honorable Modise. The commitment I can make is that by Friday, we will set up a meeting with the relevant team to meet with the colleague, together with the relevant executives, and we'll attend to the matter. But, Chair, we will definitely, through the parliamentary office, maybe engage Mr. Ndima in order to assist us to actually get the details of the matter. Thank you.
Okay, you will have to liaise with Honorable Modise first to get all the details. And thank you, Honorable Modise, for bringing this to the attention of the NEF and for being forward-thinking regarding the harshness of the letter. All right, I do not see any hands, so everybody seems to be on par with the responses to the questions. When I got back on the platform, I just heard Mr. Jarvis say that questions can be answered in writing. Now, if there are questions that are still outstanding that you are going to give to us in writing, could I please ask, it is Wednesday today, and you got the questions, that these questions be sent to the Secretariat by close of business on Friday. Mr. Jarvis?
Thank you, Chair.
Okay, perfect. Thank you very much. Once again, thank you to the three entities of DTIC for presenting. It has opened a different perspective for me, and I think for the members as well. So we have now completed our engagement with you. You're more than welcome to stay on the platform as we carry on with internal duties that we have to do. So thank you very much. Mardia, could I ask you to flood the first set of minutes, that of 10 June? Thank you very much. Colleagues, just check whether you are marked present or whether you submitted an apology. Looks as if we were full house that day by the looks of things. Okay. These minutes were circulated. I'm sure members have read them. I see Honourable Pienaar's hand is up. I hope that's for the adoption, and then Honourable van den Berg.
Yes, Chair, it is for the adoption of the minutes.
Thank you very much. Honourable van den Berg.
Yes, Chair. If Honourable Pienaar is not as fast-handed, I would have been the one that was asking for adoption, but now I will second them.
Thank you very much. Colleagues, sorry, I completely forgot with this power outage that we have. Before we attend to our matters, Honourable Godlimpi, would you like some closing remarks? That was an oversight on my side.
No, Chair, don't worry, don't sweat it. I think the responses by the teams were sufficient enough for us to close on a common footing. So thank you very much.
Thank you very much, Honourable DM. Sorry about that. Mardia, you have that. Could we have the 17th of June's minutes? And I hope Van den Berg's hand goes up first. I see he was present. Okay, there we have it. Could I ask, I see, oh, we have Honourable van den Berg, Honourable Pienaar, Honourable Modise, Honourable Nodada. So let's start with Honourable van den Berg, as his hand was up first.
No, Chair, this time I didn't want to propose. I wanted to second, but now I want to propose. Thank you.
You are playing a game today. I see Honourable Modise has lowered his hand. Honourable Nodada.
I second the adoption, Chair. Honourable van den Berg.
Thank you very much. Yes, we are very funny today, but I think what I'll do is I'll ask Mardia to change the first one to the adoption by Van den Berg and second by Pienaar, but I'm not going to do that. Colleagues, thank you very much. Just remember that next week our meeting will be on Tuesday because Honourable Modise has oversight to Madibeng. So do not wait for a Wednesday meeting for this committee. It will be on Tuesday. So just keep that in mind. Mardia, anything from you and the team?
Not at this stage, Chair.
Okay, thank you very much. Colleagues, good luck to those debating this afternoon, and the meeting is adjourned. Thank you. Bye-bye.
Thank
Thank
you,
you.
Chair.